How many deals would I have to do to sock away enough money and transition from broker to investor? That's a tough transition for a lot of people. One, because the broker mindset and the investor mindset are very different. Can I help you with something?
I'm sorry, Bo. I'm sorry. What?
That was all for a vape.
I'm so sorry.
All right, take a moment.
You're saying.
So brokers think in terms of how can I get to the end and I can get paid. Well, investors think differently. Your first deal is the hardest because you don't have, if you want to do something big and exciting, collaboration is probably the way you're going to get there. And most brokers, in my opinion, have this desire to become their clients. And I remember thinking, man, how can I get from my chair to his? Howard Meyer, my good buddy in Toronto, suggested we do the market analysis on Toronto to go international.
Well, let's let everybody know what we're throwing in the hat.
Yeah,
because Bo is going to do a market analysis of somebody's city.
That's right. So if you want to vote, we'll probably leave this open for another episode or so, and then do the drawing, and then one of our future episodes, we'll do a live market analysis.
Yes, we will.
Of the winning market. But, who do we have?
So we've got Howard. I said Toronto. Let's go international. Right, so that's going in the hat. We've got 3 in there already. I think we had Orlando, Mobile, and Marietta, California already. Jay Barron, our brother Jay, really wants us to do Corpus Christi, Texas for him.
Which is where he lives with his lovely family.
Yes.
Who we got to hang out with some yesterday.
I know, they were in town.
So Jay, great to have you in town, man.
We got Sadel.
Okay, with Miami.
Would love Bo's market report from Miami. Keep up the great work. Thanks, Sadel. And then we got Justin H., Mississippi Gulf Coast, Gulfport, Biloxi.
Biloxi.
Is that what it is?
Biloxi, Mississippi.
My handwriting was awful on Biloxi. Yeah, Biloxi.
I also wanted to mention, Justin made this comment because on our this episode 55 on the art of leaving a voicemail.
Yes.
This is Justin's comment. New fear unlocked.
Yeah.
Like that needs like a sound effect. So I'm going to say it again, and in post you can add a sound effect there, like we're playing a video game or something. But new fear unlocked. Someone recording my voicemail and using it as an example of what not to do.
Yeah.
I was like, all right, Justin, we promise we'll never do that to you. Okay. But
start leaving voicemails, Justin.
Yeah.
Start leaving them.
That's awesome.
Do it. Unlock that fear. Yeah. Go follow the fear, as we say in improv. Fear. Yeah, cool. A few shout outs right at the top. Thanks for leaving comments. You always shout out comments. We'll select a few every single episode. If you leave a review on Apple Podcasts, you will 100% get a shout out from us. So go do that now, maybe. Helps us out a great deal.
Yes, we appreciate it.
Yeah. Welcome to Commercially Speaking. I'm Timmy Barron, ADHD.
And I'm Bo Barron, CCIM.
And Bo is teaching me everything he knows about commercial real estate.
And we're 55 episodes in. And man, I must be honest, it's a little bit more difficult to figure out what to do episodes on. There is a finite amount of knowledge that I have on commercial real estate to share with you.
Y'all leave comments of what Bo should teach me as well, and what you want to know, because I am your sit-in.
Oh, I got to tell you this story.
Okay.
Should I tell us? Yeah, I'm going to tell us.
Yeah, we always cut it.
I'm teaching with my good buddy Nate Worthen out of Utah. Wonderful human. He's like the ultimate hype man. You never feel better about yourself than when you're with Nate. I love this guy. He's a great instructor. He looks at me after day 1 and he goes, you said idiot a lot. And I was like, I did? He's like, yeah, probably 20 times.
Wow.
Wow. I had no idea that I had overused the word.
Sure.
So day 2, first thing, we're reviewing the homework from day 1. I just stopped mid-question. I was like, you know what? Nate shared with me last night that I used the word idiot a lot yesterday. So I just want to apologize for overusing that word. This is day 2. The word of the day will be moron. We'll switch it up, okay? So
it sounded like you were talking about a little self-reflection. I'm going to work on it. Well, I've got from hanging out with Jay, this I thought was really just great, and I want to share with our listeners. Being stuck in traffic, getting cut off, or any of that, throwing up the bird. There's nothing, in my opinion, there's nothing wrong with that. It works. It works well. But some people don't always like to flip the bird, like our brother Jay. Mm-hmm. Jay doesn't cuss. He really likes to stay clean as far as his language goes, right? And I might have said this before, but I laugh and I tell people often that if Jay gets cut off, he won't flip the bird. Instead, he'll go... He'll just throw, like, the same amount of energy, throw a thumbs down. And to me, I just think that's so funny, but not very effective. Not very effective at all.
I've thrown the thumbs down before. Like, I've done that.
Yeah.
Maybe at least once.
I throw the bird. But there's once I was in the car with Mom and Dad and Tara, and we were driving. And we're leaving Chicago going to John and Barb's. And there's this truck. I think you've heard this story before, but there's this semi truck behind us that's just I just noticed it's riding our tail. So I open the sunroof and I flip the bird through the sunroof, just like get off the tail.
Now I need a little bit more context. Like, were you going too slowly?
No, it's busy. Everything's busy. I'm having a good time in the car. It's just like all of a sudden this thing is behind. So there is no other context that I understand at this moment.
Okay.
This guy's just riding the tail and continues to do it. So it's not like I just looked up, he's riding my tail, I flipped the bird. But I look up, he's riding the tail, and he's not getting off the tail. So then I flip the bird. Then he pulls up to like pass us, I think, to the right. Or I think I go in the far right lane. This is multiple lanes. Go in the far right lane, and then just so he could pass or get away. So he goes to the left of us. And then he starts getting into our lane, like semi-truck trailer here, like, and runs us off the road into the shoulder and then pulls up. It was the craziest experience I've ever had in a car. Like, I couldn't believe.
So you had to swerve onto the shoulder and hit the brakes, I guess.
Yeah, it was.
Or did he keep coming over into the shoulder?
He just kept going over. Just like, and if I didn't notice him going in, or if I didn't know he was doing it, he would have hit us. And so it was almost like he knew what he was doing. He's done it before. We've just gotten somebody off of the road. And then got in front of us, got out of the car and started, walking. And Dad was like, don't do anything. Don't say anything. You don't know if he's got a gun or whatever. He just came and just yelled. And I think he saw that we've got, Mom and Dad and Tara in the car, and he let it out and then drove off. That was not the story I was intending to tell, but the bird can get into trouble.
It sure can. It's very inflammatory.
It's very inflammatory, but in some situations, I think it's great. If it works for you, works for you. Anyway, back to Jay. Jay gives thumbs down. I think it's so funny. I don't think it's very effective. Could be. But last night, Jay shared with us that he's not doing that anymore. You okay? You need some water?
I'm fine.
Okay.
Don't breathe coffee. Tip of the day.
Yeah.
Holy moly.
Anyway.
Sorry I interrupted your story.
It's okay.
Proceed, sir.
So Jay shared that he's replaced that with something else. And that something else being... So I'll honk at him, get the attention, and just look at him and point to his... Brent, like, you're an idiot.
Not
you're
so
a moron.
smart.
And I just love that. Because I think that might be more effective. Because
it's certainly not as inflammatory.
Right. You're calm, you're cool, collected.
But you are communicating your disapproval of whatever led to that.
Right.
And suggesting that they might want to be a little bit more thoughtful in their driving choices.
Yes. For some reason, I think that is so great, and I might start using it.
If the next time I'm at a conference and people walk by me and they start going like this, I'll appreciate it. I'll know you're a listener.
Yeah. So instead of asking you, what are you teaching me today? I've got a question. What are the tiers of investing? And what I mean is, like, the first thing you ever invested in was an apartment building. Mm-hmm. And I know that you borrowed the money. To me,
the first one was a failed syndication that I ended up buying myself.
Gotcha.
And borrowed the down payment from Granddad. The bank lent me the rest, and I went in basically with 100% financing which I do not recommend.
So that seems like tier 1.
Yeah, so if you go back to early on in my career before I'd invested in anything, I was a broker. Mm-hmm. And most brokers, in my opinion, have this desire to become their clients. And so I was spending time helping business owners and investors buy and occupy or lease space. And I remember looking at Dad, because Dad had developed and owned commercial real estate. He had investments. And I remember thinking, man, how can I get from my chair to his? Mm-hmm. I was like, how many deals would I have to do to sock away enough money so I could afford a down payment on anything and do my own deal and transition from broker to investor? That's a tough transition for a lot of people. One, because the broker mindset and the investor mindset are very different. Can I help you with something?
I'm sorry, Bo. I'm sorry. What?
That was all for a vape. Am I making you nervous?
No, it's not personal. It's my addiction. It's my addiction. My Nick, I didn't want to have to throw a Nick fit. I'm so sorry. I always know where it is.
All right, take a moment.
You're saying.
But like, how do you go from one seat to the other? The broker mindset is very transactional. Our deal cycles can be very long. Like, I've worked on deals that have taken years to win the business in the first place, and then another 6 months to 18 months to actually close the deal. And so from the very first moment that you realize there's an opportunity to the point that you get paid can be 3, 4, 5 years.
Yeah.
Those deal cycles are pretty long. But a broker thinks in terms of, you know, from the moment the opportunity is recognized, from that point to the point that you get paid, that's a long time.
Yeah.
So you win the business. Somebody hires you to help them do something.
Yeah. And
you don't get paid until you've successfully helped them to do something. So,
oh, wow.
Long cycle here. And so once the transaction's over, you get paid and then you restart. And so hopefully you're always doing your prospecting on this end. So you're always stacking opportunities. So as they move through this cycle, you start to get some deal flow on the other side, because some of these won't materialize.
Yeah.
And you never know what's going to materialize. So you can try to qualify people on the front end or whatever. But
yeah.
So brokers think in terms of, how can I get to the end where there's a closing or a lease executed and I can get paid? Well, investors think differently. They're looking for opportunities in real estate where they can acquire it and then own it for a period of time. And so that transaction that the broker gets paid on is kind of on the front end of the way a broker or the way an investor thinks. That's when you start to own the real estate. That's when you start to see things like
cash flow,
depreciation, equity. And as you continue to pay down the mortgage, if there is a mortgage, your tenants are paying you rent. You turn around and pay the mortgage. So in some sense, your tenants are paying for the mortgage.
Right.
Every month when that happens, you get a little bit more equity in the property. So
the tax breaks as well.
With depreciation, that's generally depreciation. You can, we've talked about cost segs and bonus depreciation and all that.
Right.
And then there's also appreciation. So
if you're like, what are those things? You can watch that right here. So good.
Yeah, those are kind of the 4 reasons people invest in commercial real estate. You've got appreciation, cash flow, depreciation, and equity. And so over time, those 4 things build. But that transaction that creates the commission for the broker is on the front end for the investor, and then they have to own and operate the property. So they either hire management to operate it for them or they do it themselves. And then at the end of that, they got to figure out how to exit the property. The broker's trying to get to a transaction so they can get paid, and then it's over and they move on to the next thing.
Yeah.
The investor is trying to find an opportunity where they create that transaction where they buy it, the broker gets paid, and now they own it and need to operate it. So I think I was very fortunate because my managing broker when I started the business was our dad.
Yeah.
Who was an investor and a broker. And so as I spent my first 2 years basically shadowing him, I saw him worked transactions that led to a commission. And then I saw him run and operate the properties that he owned. And so the transition from the broker mindset to the investor mindset was very natural for me. But what I've learned is for most brokers, that's a very hard transition. And
I mean, it was even hard for you.
It was hard for me to get from this seat to that seat.
Yeah.
That was difficult. But the mindset shift was not that difficult.
I see. Okay, cool.
To think like an investor versus a broker. Like I just saw that modeled in front of me.
Gotcha.
I thought that was part of the gig. I've found out since that that's not a normal thing. And a lot of brokers who are great at underwriting and great at projecting, they've got no experience or little experience actually operating the properties. And look, there's plenty of people out there who want to invest or have invested in property, and they weren't brokers before.
Sure.
One of my clients, he operated a business that used space. Matter of fact, I've learned more about operating property by helping him buy some things.
Oh, wow.
Than I have from any course I've ever taken. He probably didn't even do it on purpose.
Right.
But he just let me into how he thought.
What are the common types of people that become investors? Joe Schmo decides he wants to be an investor. You can't just be one because you need capital.
Well, look, I'd say anybody that's entrepreneurial, whether they're an entrepreneur or not, like one of my best buddies, he's been on the show, Ross.
Yeah.
Like he was in corporate America for years and years and years. He had an entrepreneurial bent the entire time. You know, if you have an entrepreneurial bent, then I think you're a great candidate to become an investor in commercial real estate. Like if I'm just thinking through who some of our clients are, you know, contractors, they're already, it's a adjacent industry. You know, somebody's got to build this stuff. Right. And if you build this stuff and you can make enough money, I think you're a great candidate to be an investor. Any kind of business owner who's had a lot of success will have the money to do it and probably the business acumen to do it. Doctors tend to be, they're not always great at it.
At investing or like running the business?
They're not always great investors. Oh, okay. Some of them certainly are, but they're so smart.
Gotcha. So for them, they're not so much, I don't know if trusting is word, but putting a lot of trust into the broker or the...
I have seen...
Just a little, go around smug. So,
I wouldn't necessarily say that. I mean, I've met people in all kinds of industries that are very smug. They don't want to admit that they need help or whatever. And
yeah.
Anybody that has an entrepreneurial bent is willing to learn from others, build a team around them to help them succeed, I think is a great candidate to be a successful investor in commercial real estate.
Yeah. And we do have an episode on how to work with a broker where you kind of break down the different types of investors, which is I think, a good episode. And it needs some views. I think it's another underrated one. It was towards the beginning, but I like that one a lot.
Okay.
Yeah.
So, but in my journey, like you described, when I learned what a syndication was, I thought, ooh, there's my path from this seat to that seat. Like I don't have to wait all the time to save up this big pile of cash so that I've got a down payment or even a bigger pile of cash so that I can actually pay cash for a piece of property. Like I can put a group of investors together. So my first deal, like I've shared on episodes previously, was a failed syndication. I was too young. I don't think I had enough of a track record. I don't think my skill set was proven. And frankly, I don't blame any of those investors that initially thought, oh, I like this idea. And they verbally, soft commits. And then when it came time to pony up the cash, they had second thoughts and they bounced. And so then Dad talked me into buying it myself. I went to Granddad, got the down payment, bank financed the rest, and I went in with 100% financing. And that was a very challenging deal because I had so little margin for error because my debt load was so high. And so I would not recommend that. But that's how I got into investing in commercial real estate. And then a little while later, I found another opportunity, tried the syndication deal again. The first guy I pitched it to took the whole deal. And instead of putting a group of investors together, I ended up with a partner.
Oh.
Who ended up buying me out later.
Yeah. Would that still be considered syndication?
That was just a partnership. Then I paused on the syndication thing for a period of years. I actually got out of commercial real estate for a while and worked in food safety technology.
Yeah.
Worked for a national commercial real estate company and worked at the Mossimo Group for 3 years. And when I came back to the business, got back into brokerage. I had a little bit more of a team at that point. Like we had a good property manager. I had top producer Todd Humphreys.
Yes.
Was with me at this point.
Top producer Todd Humphreys.
And our next 2 syndication deals were actually deals that he managed for one of his previous clients.
Oh, nice.
Who had passed away. And so I knew a lot about the properties because we were managing them. I had good visibility into how these properties were operating, and therefore I noticed the opportunities that they could become. And so we put a couple groups together and bought those deals, and those syndications worked really well. We still own those properties. Did another one at the end of last year. Syndications, though, are a lot of work. So you put this group of investors together, relationships that you previously had that have given you money so that you can make them money. So stakes are now higher. Like I feel the weight of that. And then once we buy the property.
The deal. You did the deal.
My broker brain is like, done. My investor deal is like, this is just getting started. And now it's my responsibility to operate the property, not just for my benefit, but for the benefit of this group of investors who have trusted me.
Right.
They've trusted my experience and my skill set, and they believe that I can make them money. And I feel that, and we have to deliver. So if you wanted to continue along that path, every time you do another deal, I would either have to work more hours or build more of a team. Neither of those sound like something I just want to do over and over and over and over again. So we've had Brad Arns on the show.
Yes.
He and I were talking. We came up with this idea that we'd start a fund, which we've done. Just closing out Fund 1. And we haven't talked about it because it was an active offering, and under the rules of 506B, like Reg D 506B, I believe, we can't use advertising in any way. And like a podcast episode would be, I don't know what the technical term is, but it's an implied offer to the listeners to invest in Fund 1 without a previous existing relationship, and that breaks the rules of Reg D 506B.
But we can talk about it now because that fund is...
It's closed. It's not an active offering anymore.
Oh, okay.
In Fund 2, which we're about to start, we're going to start as a Reg D 506C. And there's different rules for 506C, and we're allowed to advertise.
Oh, so you can talk about it.
So we can talk about it.
Oh, okay.
But Gene, who we've had on the episode, he's our syndication attorney. And
it's great.
And he'll tell us.
So smart.
If we need to get rid of this episode, he'll tell us.
Yeah, he will.
And so our Hearthstone Fund, which is the name of this company that Brad and I founded, it has the same rules as a syndication. However, investors invest in the fund before they know what we're actually going to invest in commercial real estate-wise.
Okay.
You'll hear it called a blind pool, and it requires even more trust. And when I was pitching these previous syndications, they were a group of investors. We're going into this deal and this deal only. I can take them through that deal. I can talk about the tenants. I can talk about cap rates, cash-on-cash returns, internal rate of returns, talk about the property, the market, demand. We can talk about all that in the context of a specific property. They know what they're investing in. In the blind pool, they're trusting us even more. Frankly, until this point in my career, I didn't think I'd ever be able to pull that off. I didn't think I had the track record. So this is a way for us to help our investors make a really nice return. And instead of looking for opportunities in properties that we'll buy directly and then operate, we're looking for great sponsors who we trust, who have a great track record, who are great operators, and we supercharge their deals with our fund equity. We make it easier for them to raise the money that they need to do the deals that they have found. And then our responsibilities as the fund manager is oversight. We're going to duplicate some of the things that we're going to do, what the operator's going to do. Like we'll do a market analysis. We'll underwrite the deal. It adds another set or another couple of sets of eyeballs, checking their work, make sure there's not any gaps. And a great sponsor should welcome that. But the day-to-day operations are the responsibility of the operator.
Yeah.
And that's what was one of the things that was so exciting about this is we can still create something that is fun, lucrative, and exciting, and big, and gets us up in the morning excited about our day, like there's a challenge here, and we don't have to operate the property. However, if it goes bad or something happens with the sponsor, we can step in and operate the property.
Gotcha.
So it almost gives a little bit extra continuity for our investors. Now, I don't think I ever would have been able to pull this off, by myself. So Brad is a key piece of this. And if I wasn't 20 years into my career, that's sort of the, when you talk about the 3 tiers, like I did the first deal, failed syndication, but I was able to pull it off with way too much financing. Second tier.
You had a partner.
Yeah.
In your second one.
I know people who have become investors because they're hungry, they've got a certain skill set, and they've got a partner with the cash. And they're like, hey, I'll fund it, but you go do all the work. And that's been very successful. And then, of course, the syndications where you, like I described, you do a direct deal. And then the fund thing, the way we're doing it is where we invest with great sponsors, GPs, operators, and we don't have that responsibility on the other side of the close.
Of operating
the property.
Right. Does that in turn allow you to seek out more deals, I guess, or seek out more sponsors?
Well, here's what you can do with the fund. If I'm going to do a deal directly and I'm going to operate it, well, if we buy something in Phoenix, Arizona, I need to create a team there. I need to find a great operator that can do it because I'm not there and my team's not there.
Right.
So we've got to create that piece. That can be a challenge.
Yeah.
And with a fund, it's geographically agnostic. So wherever the sponsor is, if we like the market, we like the deal, then we'll take a look at it.
And you're using their team.
We're using their team, their expertise, their track record, their skill set. We vet the sponsor or the operator or the GP. Like we vet them as much, if not more, than we do the actual deal itself.
Sure. Would you recommend somebody that was in your position putting syndications together? Would you recommend that they maybe go look, see what funds exist over putting another syndication together? And maybe that's an awful question, but...
Well, when I was putting syndications together, I don't know where the fund yellow pages are. You know what I mean? It never even occurred to me.
Yeah.
What I was looking for, I was doing smaller deals, and I could raise the equity with my circle of influence, what you would call like friends and family. And most of the time, and I think we talked about this on our episode with Gene, the first deal you do, you're generally raising less than $1 million, and you're generally doing it with friends and family.
Right.
Your first deal is the hardest because you don't have the track record of doing this thing before.
Right.
And so you really have to go with your inner circle of people and try to raise that money.
Yeah.
And then after you've done it once and it's your next go around, then you can try to do something bigger or whatever. But like it never occurred to me, where are the funds?
Right.
I don't know of any in Owensboro.
Yeah.
Right. And if I did know them, I certainly would have thought they would not have been interested in my first deal.
Yeah.
Maybe the second one, maybe the third, but it just never occurred to me.
Right.
I knew what, investment funds were.
Right.
They've existed for a long, long time. But in some ways, I feel like I'm entering a space where I'm just not familiar with the space very much.
I know. That's why I was really curious about what you were learning and kind of comparing.
Fund 2, we're going to start going after private equity, family offices, institutional investors.
Well, you might not know the answer to this, but is there a tier above the fund, to your knowledge?
Oh my gosh, yes. So, you got real estate investment trusts. You've got, you ever heard of Blackstone?
Yeah. So
Blackstone is us with a whole lot more commas in what they deal with.
Yeah.
I think they just did like a $10 billion multifamily acquisition.
Oof. Whew.
So yeah, there's a lot bigger.
Yeah. Well, I guess like anything else, you just slowly work your way up.
So from the investor side, if you want to own commercial real estate and you want to do it yourself, you can start flipping single family homes, or you could start buy a house, rent it out, buy a duplex, rent it. You can start small and do that. You can go the syndication route, put a group of investors together and go buy something bigger, operate it. Or you can decide to be more of the LP, the limited partner, and invest with someone else and trust their expertise and their skill set and their ability to identify opportunities and execute on a plan.
Passive investor.
So yeah, it really just depends on how much control do you want, how much time do you have, how much bandwidth do you want to commit to something, what's your skill set. You start answering all those questions and you can decide, do I need to be the guy who's actually finding the deals, buying them, operating them, or do I want to find somebody that is good at all these things and trust them to go do what they're great at while I stay kind of in my lane.
Right.
If I'm an accountant, let me go to work and do great accounting work while, somebody else who's good at this takes my investment dollars and tries to make me a good return.
Right. Now that you're looking for sponsors, and this might be an obvious question, but what makes a good sponsor or one that would make your ears perk up?
Well, for the Hearthstone Fund, a key component of all of our funds is that it does good. And so we're not just looking for the deals that...
Not well.
Yeah, that's not me having bad grammar.
Yeah, it's not just about... Yeah, it's not.
It's key that the Hearthstone Fund does well, that it creates a good return.
Right.
But we're looking to also do good in the world.
Yeah.
And so, our first fund invested in some apartments that are leased to legal refugees. And it's serving a people group that really, really struggles finding good, clean, safe housing when they come to the United States.
But also excel.
They do great, given the opportunity to have a stable place to land. And so Fund 1 is all about providing that stable place to land. And we did it by partnering or investing in our friends with Launch Capital out of Louisville in their deal in Dallas.
Yeah.
And so they're the operators. They're the ones that have a proven track record. So when you just look at them as an example, I've known them for a couple years, right? I know who they are. I know what kind of fathers they are, what kind of husbands they are. I know them, right? And so just understanding their character is a big deal. I've seen their track record, and I understand their mission, and I've seen how passionate they are, and I've seen the kind of operators they are.
Right.
So, if somebody were to approach us, or if we were to approach somebody else, one of the things I need to figure out right away is what kind of track record do they have? They don't need to have 20 years, right? But they need to have some kind of track record, and we need to get real comfortable real fast that they're outstanding operators. And then I want to understand, what's the business plan of the deal? What are we trying to accomplish? And is there some good that's being done? Well, look, these are still C-class properties. It's like you and I probably wouldn't rent them, but they're clean and they're safe and they're nice. And these people are so grateful because where they're coming from, they just want stable and they want a chance. What they do to love on these people, makes the business plan work better.
Yeah.
They operate better.
These refugees that on average stay about 4 or 5 years, what they have seen or what they're seeing is when they move out, they're moving out to buy a house.
Yeah.
Right?
Yeah. And so it's like a celebration when they leave that apartment community. Right. It's like they throw a party because these people have saved up and they're buying a home.
And to me, it's like that makes C-level housing a springboard.
Well, I can tell you that creating the Hearthstone Fund with Brad is so far the most exciting thing that I've done in my career and the most satisfying. And we want that to continue to be true. And we want to attract investors who want that same kind of excitement and making a great return, but also the satisfaction that you're doing good in the world with your dollars. Hearthstone is about both. And not one or the other. And what we've seen so far is the more good that it tends to do, the better the return seems to be.
Yeah, that's amazing. Amazing.
It's amazing. It's funny how that works out. And so we want to attract the kind of investors that care about both of those two things. And we want to repel the investors that don't.
Nothing wrong with them.
No. Yeah. They're not a good fit for this. This isn't their thing. Totally fine. So we want to attract those types of investors to the Hearthstone funds and do some good in the world, man.
Yeah.
But does that answer your question?
It does. It does.
Tiers of investing?
Yeah, tiers.
And look, let me just say another thing about these tiers. Some people think if they're not working up the ladder, they're failing. Not true.
Yeah.
We had a client one time her and her husband bought a house every year their entire marriage. And when her husband passed away after 30 years of marriage, they had a portfolio of over 30 single-family rental houses.
Wow.
They weren't trying to go out the ladder. They had a plan that they liked, and they executed it for 30 years.
Yeah.
That gives me goosebumps.
Yeah.
You know? They didn't need to be syndicating and that's not where they fit.
Yeah, this is not an episode to encourage people to climb the tier.
Yeah.
No. You didn't even know what it was going to be. You knew that there was more you wanted to do, but you didn't even know.
Yeah, look, I called Brad, and we had a conversation centered around, if nothing was holding us back, what could we do? What could we create?
Right.
And we spent probably an hour on the phone. We both noodled over it. We had a couple other conversations, and the fund was born out of that process.
Right.
And
he wasn't the only person you called, too.
Yeah, he was one of 7 conversations I had like that.
Yeah, you were just looking and feeling out what could be next and who to do it with.
Yeah, I was trying to get clarity on the vision of the future, and I had no clue what that would be. I had a conversation with seven people, and look, there were other ideas that were good ideas that came out of that might still turn into something. You know?
But I think that's a good point to lay out too. I think what Brian said, with anything that you want to do or improve yourself or move or figure out what's next for you, is to go and talk to people with the intention of figuring that out rather than waiting for it to come or trying to figure it out yourself. There's just so much power in talking.
And if you're going to do that, I would recommend that you go into it with the mindset of, if you want to do something big and exciting, collaboration is probably the way you're going to get there.
Yes. Yeah.
Some people want to do everything themselves, and they limit what they can accomplish, you know. And so with Brad and I, we're convinced that we can go further, farther, faster together than if we try to do something like this on our own. And it's certainly true. Like, no way I could have done what we just did with Fund 1 on my own. Couldn't have done it. Like, I needed Brad and his skill set, and together we were able to do something that I certainly couldn't have done on my own.
Okay, cool. I thought this was a great conversation.
Yeah.
Yeah.
Me too.
Yeah, I thought it was really great. It's cool. If you all got any questions or you want to learn something else, put it in the comments right now. I think we're gonna draw what city you're gonna do a market analysis on the next.
Yeah, let's say next episode. So we'll give it about another week.
Yeah.
If you want to offer up your market, put it in the markets. Put it in the markets.
Put it in the markets.
Put it in the comments on whatever platform you're consuming this podcast on, and we'll find it.
If you're on YouTube, hit subscribe and ding that little bell. Please, a like and a subscribe means a lot and goes a long way. If you're on Apple Podcasts, please write a review for the same reason, and that really helps in this world.
It helps other people find the show.
Helps other people find the show.
Yep. And that feels great for us.
Yes.
And hopefully brings value to them as well.
Right.
And you can facilitate that. So
that's right.
We appreciate it. And if you'd like to be a subscriber to our weekly newsletter, you can go to subscribe.wgbarron.com. And I think those generally go out on Thursdays.
And you will never miss another episode.
That's right.
On there. And there's about 5 or 6 different articles about business, commercial real estate, all really good stuff. And so far, our email list loves it. Or they're at least opening it.
That's true.
Right?
Yes.
So jump on in.
And at the very bottom line, we're grateful for the time that you spend listening to our show or watching our show. There's nothing more valuable that you have than your time. And to give us some of it,
thank you.
We don't take that for granted,
right.
And we appreciate you for it.
Yeah, thank you so much. Do you want to shout out the webinars that you got coming up?
Yeah, hopefully by the next episode, I'll be able to send them somewhere so they can register.
Sure.
But we're going to be doing, with the CCIM Institute, a currently commercial webinar series, trending topics in commercial real estate. And we're probably just a handful of weeks away from the first one. And the first ones are going to be AI related. And so we're going to be bringing experts on to talk about what's going on with commercial real estate and AI. And we've talked about that some on the podcast. I'm certainly not an expert, but I'm really looking forward to learning from the experts that we're going to come on and just get a feel, because and our industry is changing in a big way. It's changing very quickly, and there's going to be plenty of businesses and brokers that get left behind. So we're going to try to prevent that and give you what's going on today. With these webinars. And so once we get a link up and a solidified date, we'll share that with everybody.
We can throw that in the
show notes.
In the show, but we show it in the newsletter, right?
Yeah, we can.
So sign up for the newsletter and you won't miss that.
Absolutely.
Right?
Yep.
Cool.
That is good word.
That's how we'll do it. Okay, cool.
Right.
Well, love you, brother.
Love you, brother.
Bye, Alice.
Bye.
Bye. We'll see you all next Monday. Bye.